In today's video, we're discussing 3 high-yielding dividend plays that yield between 15 and 25% dividends. Okay, OXLC, ECC, and OCCI. So if you stick around to the end of the video, I'll share with you my favorite pick on which CLO I'm going with, because these are CLOs, a different asset class. We earn over $132,000 per year in dividends at this channel. And that number has gone up recently because of our yield max dividend announcements and because cornerstone drips are coming in. We are also at 0.35 for the day on Friday, which beat the indexes on Friday. The S&P was only was down 0.29, and every index was down on Friday. So we beat all the indexes on Friday. And on a year-to-date basis, we're up 39% for the year, 39%. The Dow's up 1, the S&P's up 14, and the Nasdaq's up 30%. So this is really unusual to see with such high-yielding dividend plays. Many people wonder how I do this. Okay, how am I getting this performance? Well, it's because of margin. For every $1 you put in your account, you get $4 of purchasing power. So I just use a fraction of that margin, which many of my subscribers here are familiar with now. And as long as this available withdrawal number stays high, above 0, then I avoid margin calls. So the CLO that we're going to pick today that I'm going to buy on Monday, you'll see why I buy it. And it particularly has to do with this available withdrawal number. I don't like to buy things that take up this available withdrawal number, because you want to be able to live financially free in this world. And through my channel and what I do at my brokerage account, this is what I promote. Not only high dividends, but performance, like you saw, so that you actually get ahead. You're not just breaking even. And yet you still get a high enough equity cushion to withdraw from and swipe your E-Trade card out of. I travel the world with my E-Trade card. I buy food, I buy a house, buy a car. So like I use the down payment from E-Trade on a car, and then I qualified for my car with dividends from E-Trade. So this really is the secret to living financially free. This debt that I have is low interest, and I just used a fraction of that margin debt. Like I told you, I have $235,000 in debt, but in less than 3 years that will be paid back because I earn over $100,000 per year in dividends. And then this equity number will jump to about $700,000 in 3 years, and my debt will be at 0, and all these dividend paying names will be left to myself free and clear for life, paying me monthly cash flow for life that qualifies to banks for loans, okay, for life. So they're like a synthetic pay stub. So if you need help using margin, email me for my e-guides at akintodd48@gmail.com. I have e-guides on margin, and I also have e-guides on Cornerstone, which is where I also get my performance from. Just briefly, I'll share with you, $8 is the market price, but the drips, they come in at $6 every month. So the 21% dividend in Cornerstone gets reinvested back at the NAV of $663, $652, okay, for 21% gains each month. 21, 23, 25, 28% gains. So, I mean, in the 20s every month, these drips, okay, they come from Cornerstone, which Cornerstone also matches the indexes, and that's how we really get ahead. That's why I put a big chunk in Cornerstone, 400,000, because it is the index. And if you're going to use margin, you have to tie it to the indexes, in my opinion. And even if you don't use margin, you need to tie your investments to the indexes. But you have to learn how to play Cornerstone right. You have to play the rights offering properly every year, and you have to ask for the special drip. So if you need help with Cornerstone, email me for my e-guides there at akintodd48@gmail.com. So why am I looking at these 3 different companies, these high yielding funds? Well, obviously, they're not funds, they're companies. Obviously, they have high yield, so I'm attracted to them. And I had OXLC just a few weeks ago, if you guys remember. But here's why I'm going with, are you ready for it? I'm going to go with OCCI over OXLC. And here's why, okay? And also ECC, okay? So here's the thing, CLOs, they're perceived as risky, but in my opinion, they're not as risky as you would think, because even though they invest in non-investment grade companies, CLOs, they buy these tranches of debt, okay, and they usually buy up to 200 or so loans, different companies with different maturing dates on their debt. So they spread around their risk really well when they have so many loans, okay? And so look, OXLC, two-star fund, not that great, but as you can see here, it made you $30,000 in 10 years, okay? That's not too bad. Now let's go over to ECC, and this is one of the higher quality funds. CLOs, not a fund; it's like a stock, trades like a stock. Okay, 3 stars ECC, and it made you 22,000. So it made you less than OXLC. And then if you go to where I'm interested in today, OCCI, which was recommended to me by a subscriber, so thank you. OCCI is 4 stars, kind of like Cornerstone. See, that's why I like Cornerstone, by the way. CLM, as you guys know, I just have to show you. CLM, also 4-star. But see, this is a different kind of 4-star. 4-star CLM, but look at what it made in 10 years, 50,000. Okay, so that's why I have 400,000 in these Cornerstone funds. CRF also, well, actually, CRF is 5-star. Okay, 5 stars, and it made you 55,000. So this is where the real money is, and that's why I have most of my money in the Cornerstone funds. But OCCI, again, going over to this CLO that we're looking at, this collateralized loan obligation asset class, 4 stars, okay? And it didn't make you much money, it shows on the chart. It's a pretty new company. But the dividend sustainability of this fund has been quite remarkable, and I think that's why, and I keep saying fund, just excuse me, it's for ease of conversation. This company, OCCI, has maintained a relatively high dividend payout. Even during 2022, the crisis, the bear market of 2022, they maintain a pretty good payout. So 26% dividend this fund has, okay? And OXLC has a 19% dividend. And I believe ECC has a 15% dividend. So I'm just giving you all the pros and cons. 19% dividend for OXLC. But look, OXLC goes on a max chart. It goes downward, okay? Left to right, it goes downward. So does ECC, okay? ECC. We go here to the chart of ECC, and we'll see 16% dividend, and it moves downward left to right. So if all these funds are moving downward left to right, why not look at OCCI, which not only has a large dividend, 26%, and it's moved down left to right, albeit probably in a larger magnitude because, definitely a larger magnitude, and it's a smaller market cap. So, of course, it's going to move bigger than the other 2 companies. Those other companies, OXLC and ECC, dwarf OCCI in market cap. But again, you saw their ratings on Morningstar, and OCCI had a higher rating. And again, I think that's because of its dividend sustainability. If we go over to Seeking Alpha, we can see their sustainability on this chart. Dividend history, it stayed pretty solid over the last 5 years. Sorry that the chart is sideways there. So flipping the screen back here again. So OCCI, again, 4-star fund. I mean, you can't ignore 4 stars. Get off the screen. You can't ignore 4 stars, okay? So 26% dividend, but the dividends held, as you saw there on Seeking Alpha. I couldn't really show it to you clearly, but you can go back and rewind that and pause it. The dividend stayed relatively stable. So if you can just time this vehicle, it looks like, look out on a 1-year chart, OCCI, it's at the lows, okay? So it looks like you just buy in the $8 area and you sell at the $10 area. So you take this for a day trade, not a day trade, but a swing trade, I think, because again, look at how it's coming off the lows here, and it looks like a steady pattern. It probably dropped right after the recent X date. Let's go plug in company events, X dates, dividends, and yeah, you'll see after this $ here, we had another drop. Right before that X date, it looks like. See the X date here drop. So around these X dates is when the company drops, OCCI. So it looks like the time to rebuild your position after you sold out at the highs there. Now you're just simply reloading and buying at the lows again. So OCCI, here we go. I'm going to do a quick purchase of that, and you'll see on Monday. This is the real reason, okay, why I'm buying OCCI. OCCI snapshot. Look here, 26% dividend, but look at the maintenance. 30% maintenance. Now go look at OXLC, which we just had and we sold out of. And I never put a lot of money in OXLC because it's high maintenance, okay? high maintenance. See, it has a 19% dividend, OXLC, not bad, but 100% maintenance. So for every $1,000 I put in this stock, 1,000 of equity is taken up. So I can't have that if I want to live financially free. You can't just make dividends. You have to go for performance, so you're getting ahead, and you have to go for high available for withdrawal. Okay, you can't just be in high maintenance names, because you'll either get a margin call on a market downturn, or you'll get into if you withdraw money and try to live financially free, you'll put yourself in your own margin call, a house maintenance call. So OCCI, I'm doing 5,000 because if you remember, my available withdrawal was 175 roughly, correct? Okay, so preview and OCCI, okay, 5,000 place, okay, in the 8s. Again, I think it's a good place to buy in the 8s, and you sell in the 10s. All right, so look at my available withdrawal. It only dropped by, less than 1,000. I was at 175, right? So if you have 5,000 and 30%, what's 10% of 5,000? That would be 500. So do that times 3, 1,500. So we lost 1,500 in available withdrawal, which is nothing. Okay, to me, I'm still close enough to 175. So, and now we're also making, another 1,000 per year in dividends. It won't show here because I have to actually place the trade on Monday, but this number will go up, after the trade is placed with OCCI. So that's why I'm going with OCCI. Okay, they have first of all, let me just tell you, it has a high expense ratio. Of course we know that all of these CLOs have high expense ratios, and look at the stock, it falls as a result. But if you watch that Morningstar chart, you saw that that OXLC made you 30 grand in 10 years. So it doesn't look like it's doing anything on its actual chart. It looks like it's just going down because it pays you return of capital, it dilutes shares. So dilute shares, return of capital, and a high expense ratio. All that comes and factors into the stock price there, how it looks so bad. But you saw on Morningstar how it made you 30,000. So I'm just going to try OCCI. I prefer OXLC. Okay, I prefer ECC or OXLC over OCCI. However, OCCI has a bigger dividend than ECC and OXLC, and it has a lower maintenance than OXLC. ECC has a pretty low maintenance, I want to say, but it has the lowest dividend, so I don't care about ECC. It has a 16% yield, high. Maybe it has low maintenance, but it has a high expense ratio. So I'm fine with ECC, except it seems to be bigger fish to fry over here with OCCI. It has a higher rating too on Morningstar. So these are the pros and cons that I'm giving you, okay? And I'm not sure on OCCI since it's new. So I only bought 5,000. I keep all my riskier funds down here in the 5s and 1s. So OXLC, you can see we have 1,000 in it because it's high maintenance. Okay, I can't have too much of that. Otherwise, this number will go up. Will go down too far too fast, and I'll be in margin calls. And the key is getting dividends and getting performance and living financially free, being able to withdraw out of your account. So that'll do it for the video, guys. You tell me which fund or which company you like better. What's your CLO pick, ECC, OXLC, or OCCI? And if you need any help using margin or learning how to play Cornerstone, again, email me for my e-guides at aikentop48@gmail.com, and I'll talk to you soon. Thanks.